Hey everybody, welcome back to Chipstock Investor. You may know that Micron reported earnings just yesterday on the 25th of September, but we're not going to focus on the numbers that came out of that quarterly earnings, but we are going to talk about what the outlook is for the memory market, the semiconductor market, all the way through calendar year 2025. And as we have mentioned a couple times, maybe more than a couple, it's the outlook that matters.
Yeah, you should care about the outlook. That's how stocks are priced. So if you want to know what's going to happen to your stocks in the next year, keep watching. Also subscribe and stay tuned for subsequent videos. All right.
Before we jump in, just want to give a quick shout out to our sponsor, Moomoo today. Get trading fast with the Moomoo app.
That's right. Regardless of what it is you're looking to invest in, maybe it's AI, maybe it's semiconductors, maybe it's something else, they have a thematic ETF to fit your needs. Check it out. They have a long list of ETFs to choose from. Yeah, Moomoo is really easy to get started with. Check it out. Link is in the description below.
Let's jump into Micron.
All right, Kasey, tell the folks what we're looking at here in this slide.
Micron breaks up its business into 4 different segments. You can see compute and networking. That's actually where AI and data center falls. And then, of course, they have a few other units that matter very much still, even though we're very focused on AI these days, but the mobile unit, storage, and embedded.
You can see big year-over-year growth, especially in that compute and networking segment, AI, data centers. Lots of memory getting crammed into these processing chips like NVIDIA and AMD's accelerated computing units, 67% year-over-year increase for fiscal year 2024. However, do bear in mind, we are rebounding from the cycle bottom. The bear market was pretty rough on Micron and its fellow memory chip makers. So even with this recent update for Q4 fiscal 2024 for Micron, we are still about 25% below the peak in 2021 and 2022 during the peak of the lockdown period when it seemed like the whole world was going to be digital and virtual for forever. So that big data center compute and networking business still about 25% below the peak. So we're still ramping up to reach new revenue all-time highs, which Micron expects it will reach sometime in fiscal year 2025, which mostly corresponds with calendar year 2025.
Micron released this outlook. They said that in calendar year 2024, the DRAM industry outlook has improved, driven by data centers. And then in calendar year 2025, DRAM and NAND industry growth will be around mid-teens percentage increase.
And do bear in mind, that's not revenue, that's bit demand. So units of memory demand. So obviously as computing needs get ratcheted up because of things like AI and accelerated computing, companies need to cram more memory into those data center servers. That's what this is talking about. But what does that mean for a company like Micron and for its actual financials, its revenue? This is where Micron's supply outlook comes into play. So we know the demand is there. What about the supply? Well, they actually say that overall memory chip industry wafer capacity, wafers are those disks that get cut up into chips. You often see people in those lab bunny suits holding those things. They get chopped up and packaged into DRAM chips, or the hot product right now, HBM3E, which is actually multiple layers of DRAM chips stacked on top of each other. The actual capacity for the memory chip makers to crank these things out is actually below peak levels in 2021 and 2022. That seems really confusing, right, Kasey? What is going on? If the demand is higher, why is the supply still below peak levels? That sounds like a bad thing for Micron.
Maybe you remember this from your Economics 101 course, supply and demand. And if we think about it in the light of what happened with Micron during 21-22, when there was a huge increase in demand, Micron chased that demand with extra supply. And then the bear market hit. And guess what happened? That supply overshot the demand. And now they've pared that back. Micron now has a reduced supply so that they can keep the prices high. Nick, explain that a little bit more.
Yeah, memory chips are very cyclical. So when demand is high, ideally, chip makers like Micron would like to keep the supply just under demand so that prices per memory chip are elevated and they get higher profit. It's not perfect. They're constantly chasing this thing. And so, like Kasey said, now the reverse is happening. We've had a down cycle for the last 2 years where supply has been higher than demand. There's been excess inventory. And so Micron's product sales have not been very profitable. Demand is starting to come back, though, and they're being cautious in increasing their supply so that the price per memory chip can stay a little bit elevated and they get a little bit extra profit. So that's sort of what's happening. Again, it's never perfect. Companies like Micron are constantly chasing the demand with their supply, and they oftentimes overshoot at the high end of the cycle. And then on the reverse side of that, they end up undersupplying at the bottom of the cycle. And so that's where we're at right now. They're undersupplying their customers in the hopes that memory chip prices get elevated again and their profit margins keep going up.
This chart, we have the semiconductor industry broken up into 4 different segments, and the semiconductor industry is very vast. It's much, much bigger than what we have it simplified into. And the cycles are much messier than what we have pictured here. But ultimately, everyone has been focused on this AI infrastructure portion of the industry. It's in max growth mode. It's a new market. But these other parts of the industry, consumer, cloud and enterprise, auto and industrial, they've already bottomed or are currently bottoming if it's auto and industrial. And we're at the beginning of a new growth cycle.
Yeah, and that's important because in totality, these other markets outside of AI and accelerated computing are actually bigger. And so this is really fantastic news for Micron and for all semiconductor participants, including companies like NVIDIA that purchase memory chips from companies like Micron. It's fantastic news that these other end markets are emerging from the downturn, emerging from the bear market, finally, years later, that they experienced starting the second half of 2022. So this is good news and something that still continues to get overlooked, thanks in large part to the media coverage of AI and accelerated computing and drawing this faulty conclusion or helping people draw this faulty conclusion that somehow accelerated computing and NVIDIA is the whole semiconductor industry. And it's not. So good stuff. We are just at the cusp of a new growth cycle. And this next slide that we're sharing from Micron's last quarterly update helps illustrate this a bit further. Just illustrating the fact that accelerated computing is a small part of the whole semiconductor industry pie. So in yellow, there we have this comment about HBM, high bandwidth memory. Those are the stacked DRAM chips that go into accelerated computing devices from NVIDIA and AMD, Broadcom, so on, expected to go from $4 billion in 2023 to $25 billion in 2025. Okay, these are big numbers. They're significant numbers. However, on a DRAM bit basis, again, that's not revenue, but just memory bits, storage that you can cram into these chips as a percentage of total memory bit that exists out there, these HBM chips are only going to represent around 6% of the total DRAM market in calendar year 2025. Again, accelerated computing is very exciting. We're excited about it too, but there is a much larger picture going on here that you need to zoom out and focus on besides just the NVIDIA narrative.
So what does all this mean for Micron shareholders and the semiconductor industry as a whole? Let's talk about what Micron is doing in regards to their capital expenditures. Capital expenditures are spending on plant, property, and equipment. Micron has been spending money on new manufacturing plants as well as filling those manufacturing plants with equipment. You can see that their 2025 CapEx is going to be meaningfully higher. So they said around mid 30s% range of revenue. So a significant bump. Their fiscal year 2024 CapEx to revenue is at 32%.
And on a percentage basis, that doesn't sound like a huge increase going from, let's say, 32% this past year to maybe 35%, let's say for fiscal year 2025. Not a massive increase, but remember, Micron is expected to have a significant increase in revenue this year. So not only is the CapEx as a percentage of revenue going up, but the absolute dollars spent on CapEx will also go up because the revenue is rising. As Micron chases that increased demand from HBM3E to help NVIDIA, AMD, and Broadcom, but also the entire semiconductor industry needs more memory chips as they come out of the downturn, Micron is going to have to invest in their manufacturing capacity to chase that demand.
And this brings us to one of our favorite topics, the companies that make up the wafer fab packaging and assembly equipment portion of the semiconductor industry. That's one of the main areas that companies like Micron, when they're spending CapEx dollars, where they're spending that money, manufacturing equipment.
If you missed it a couple of weeks ago, we broke this down for you in a video about Micron. We viewed it through the lens of Lam Research and who actually owns the technology needed to make chips. And these companies are predominantly what we call the Fab Five: ASML Applied Materials, Lam Research, Tokyo Electron, and KLA Core. Collectively, these five businesses control the technology needed to manufacture all semiconductors, and they also gobble up approximately 70% of all of that CapEx spend on manufacturing equipment. And especially when we're talking about memory chip manufacturing, historically, Lam Research is a top player in supplying equipment to companies like Micron, as well as some of its top memory chip making peers like Samsung, SK Hynix, Western Digital, so on and so forth.
So when you zoom out, you can see that a company like Lam Research, which is supplying the manufacturing equipment, has been a significantly better investment without all of the terrible volatility that's been with Micron.
Yeah, and as we said a couple of weeks ago, we thought Micron stock, if you're looking for a trade, was probably a good buy after the 40% drop from its all-time highs earlier this year. Looks like the early guidance for fiscal year 2025, again, which corresponds mostly to calendar year 2025, was very good. The market had a sigh of relief. Micron stock is rallying. So is Lam Research, though. There are historically these brief periods of time where Micron stock will actually significantly outperform Lam. But again, it's because it is so volatile. It is one of the most cyclical of cyclical stocks in the semiconductor industry. And so this is why we actually started selling our longtime position in Micron in 2023. We saw the opportunity to upgrade our long-term portfolio, swapping out Micron for Lam Research. And these slides are the reason why we did this. And it explains why Micron stock is so up and down and ultimately underperformed some of its suppliers like Lam Research. You can see the cyclical revenue, which we're now on an upswing. We're probably going to hit new record peaks in revenue and hopefully profit for Micron in the coming year or two. But you can see in those downturns, things get pretty nasty. Micron will lose money in bad years. Compare that to this next slide. Lam Research, also very cyclical, but it has the ability to remain profitable despite cycles. Despite good times or bad times, they continue cranking out profit and reward shareholders with things like a small but growing dividend and lots of stock buybacks.
To recap, this is why we've decided to remove Micron from our portfolio. This cyclicality is something we're not interested in dealing with. We instead wanted to reinvest those dollars into Lam Research and other companies like memory storage server company Pure Storage. If you haven't seen the video on Pure Storage, we'll link that here and in the description.
All right, everyone, thanks for watching. Things are looking good for 2025. Check out our Semi Insider, just $5 a month, gets you access to Discord. If you subscribe over on Ko-fi, you can get all of our show notes. You'll find out all about what we're researching and why and what we're buying. Also check out Mumu, sponsor of today's video. We'll see you again here real soon.